So my basic thesis that, when I looked at 2017 and did the deep dive, so by backdrop, our firm started their first gold fund in the United States in 1968. And throughout US history before that, gold had been pegged against the US dollar. So it was basically a fear that inflationary policies would lead to that break. And that's what happened in the 1970s. In 2017, I said, listen, can Bitcoin be a competitor to gold? And in history, silver and precious metals have kind of been sidekicks, I would say, of gold, like Batman and Robin. So I said, yeah, absolutely. I don't know what a fair value is. So what I did is I looked at the total market cap of gold, which is about $10 trillion. And I said, well, Bitcoin can be half of that over time. And so that's about $250,000 a token. So I don't know if that's fair value. I just kind of put it in the context of the ecosystem, what investors who want a store of value that's separated from government, paper money, might want and use. Now, the point I also make is to investors is that Bitcoin is not just a static thing. I mean, the code doesn't change very much, but its adoption over the time is really changing. Obviously, in 2011 compared to now, the number of users on the network, the number of just different applications that are built on it, the number of transactions every year, and then the political environment. Like China banned it last year. I mean, it survived that. That's amazing. It took basically a third of the validator power or mining assets and took them right offline. So every year it has seemingly these different kind of threats to it, if you will, and so it's really maturing. I look at crypto as really part of growth investments. Now, Bitcoin is separate, right? I analogize it to gold. I know the correlations are very high, but I look at blockchain as really just part of another type of disruptive technology. And growth investments were clearly overvalued 6 months ago. So we're kind of in this consolidation phase. So that's how I sort of see it. I think the markets have to deal with this last leg, I will call it, of Fed tightening, which is actually them shrinking their balance sheet, which is happening in June 2022. So this month as we sit here. So we'll have to see how that shakes out. And then I just want there to be a little bit less enthusiasm about the space and just really having prices hit a bottom, make a technical bottom, I would say. So that's really what I'm looking for.